Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and welcome to another Sunday. Thank you for carving out a bit of time to spend with me. And we're going to go over the cursory price action of the futures that are opening up right now. Pardon me while I'm a little bit distracted here. We're long of natural gas. We're seeing a big gap up here. We'll see how this settles out. It's a big move. We're only on a 5-minute chart. Let's pull back. Let's go to a 4-hour chart. Still a nice move up higher here as we proceed into the new trading week. I went over natural gas and several other derivative plays on natural gas on best stock charts. It's on YouTube. You can watch it after this video. There are several names there that are really, really nice, and you should check them out. We went long of natural gas last week on a big breakout several weeks ago on a weekly time frame. Continuation breakout last week, looking very, very nice. We're going to be looking to add more in the coming days. Besides going over, we're picking up steam here. Besides going over the futures, we're going to go talk about, as we normally do, the valuations of the market using the Buffett indicator and the Shiller PE ratio. We're going to talk about the economic data released last week, what's coming out this week. We're going to talk about what you want to talk about. What symbols are you looking at? And we'll review them. I need to go over members' requests first, but we'll segue over and into what the audience wants as well. Hey, Franklin, good to see you. I know it's crazy how fast they go. Danny, hello, how are you? Good to see you. Okay. So let's do this. We have really a big move here on natural gas, nearly 2.5% on the week thus far. I believe this is a new weekly high. Yes, it is. So we have a 3 handle on nat gas. Very nice. We did see a 3 handle briefly on Friday. It didn't hold. So we'll see whether or not we're able to hold this gap. What I want to do here is I want to go through the futures, see how they're opening up, circle back prior to us logging off at around 7 p.m. Eastern Standard Time, see how they're settling out. Hopefully this holds. This is good for us. And let me say hello to everybody. Clark. Hey, Clark. Kurt. It's been a while. How you doing, pal? Matt Carter. Hi, Bob and Contrarians. Sorry I missed Thursday. I wish I would have asked about Alterian ATER on Thursday. We'll take a look at it. Tommy, the Nose Goblin. Yo, Bob, happy Sunday. Happy Sunday to you, pal. AGFS, CCG, please. You got it. Devin, hello. Something I'm curious about your thoughts on silver ounce. So you're looking for spot silver, spot gold. We're going to go over that. Yep. So let's go to it. Let's circle through the futures action. I've already gone over natural gas. Good price action. We are long of nat gas as of last week. I want to check out the U.S. dollar to give me a feel for where we're at. We are somewhat weighted towards commodities to the long side. So we're very interested here. Oh, and we're seeing a move lower here. Actually, it moved lower on Friday, if I'm correct here. Yeah, Friday after the close. Big move lower on the dollar this evening. We have an inside bar thus far. Let's take a look at gold. Gold up, $6.50 the ounce. These are 4-hour charts. Now, gold broke out here. The 9 a.m. bar on the 14th. We did a retest of the breakout point late Friday, then rallied into the close. Good stuff. Now we're looking for a continuation move higher here on gold. We're very close to taking out the highs of last week. We are long of the gold miners, not of the metal, but of the miners. Long of silver, long of the silver miners. at or above. Okay. I just want to know if we break out to a new weekly high while we're live tonight. Silver. We're up over a half percentage point. Loving the price action here. Loving it. Because what we're doing here is we are laying siege. I'm going to be very conservative with our resistance levels. And we're right there. We're right there. So we're very close to breaking out on silver. We have a lot of a bull flag setup going on here. If you hear my dog up there, I apologize. She's actually quite cute. Hey, Pat. Sent you a text. I don't have my phone in front of me. Sorry, pal, if I didn't reply back. I'll check it out in a little while. Hi, Big Bear. Oh, you're saying hello to Big Bear. All right. Big Bear, hello, brother. Happy Sunday. NY Jets, hello. Randy, hello. And, of course, Pat, hello. Okay, let's continue on here. We haven't gone to equities yet. I'm going to tease out a little bit. I want to stick with commodities. Light sweet crude up 0.25 percentage point. This bodes well for the Dow. It bodes well for the value plays in the S&P 500, energy, banks, transports, etc. Good stuff. Nice move up higher here on oil. No new weekly high thus far. Let's take a look at Bitcoin. Not a commodity, but a lot of... Oh, look at this big dump here. This is as of the Friday's close, though. Bitcoin's had a very, very rough weekend. I don't know what's going on with this chart here, okay? But Bitcoin down very, very big, trying to move off of the lows. Bitcoin's in trouble. And of course, if you had your crayon out on Friday, you would have seen that we had broken down Friday evening. Actually, this is of the 14th, right? Because Thinkorswim doesn't include the weekends until Sunday night. Agriculture, they took a break last week. The inflation numbers came out last week, and oddly enough, many of the high-flying names that have been ripping on inflation, mainly agriculture, industrial metals, silver, took it on the chin. They sold the news. But corn, coming off the lows here, still very weak. I think we have more downside to go here on corn, maybe down to the lows of April the 27th. Soybeans, not as bad. We do have a lower high, no lower low yet. Maybe we'll get it, maybe we won't. But here is the line in the sand for soybeans. This is kind of an attractive chart, to be honest with you. But in the back of my mind, I have a weekly chart of the DBA, which is a basket of agriculture names. Very, very bearish price action last week. I'm not sure of the weighting of what ag is in that basket, whether or not it's weighted towards soybeans, corn, wheat, equal weighted. I'm not sure. But soybeans certainly looking better than corn here. And the only reason why I'm really focusing in on ag this week is because you had the inflation data, which came out very hot last week. Wheat took it on the chin. They sold the news. Let's take a look at equities. Let's go with the Pimp Mac Daddy of them all, which is the S&P 500. We are up at resistance. They're going to make a run for this. They're going to try to break it out. Now, before we go on to the other indexes, I want to take a look at what bonds are doing. Bonds are really the tail that wags the stock market dog, and bond yields are going to dictate which way this market heads. Meaning, when I say market, I'm talking about your traditional beta names, high volatility names, your Teslas, your growth stocks. If you have rising yields, you got to forget about that trade until valuations get right, and we're not there yet. We're way far. I'm going to go over the valuations in a moment. This is what I want. The 10-year note, we are flat, meaning yields are flat. All right. So we are very impartial here. No definitive move at all. We have an inside bar, in fact, very indecisive on yields early on in the week here. Small caps, they are up somewhat, flirting with prior support, now should act as resistance. Do we break out or do we fail? Do we roll over and break down to new lower lows? If we take out the lows of last week, look out below for this market, because we have been in this trading range for, I don't know, the better part of what? We're halfway through May now. We've been in this consolidation for roughly 5 months. So if we fail, if we take out this support level here in red, which we retested yet again last week, it's all over. We're going a lot lower. We could possibly head all the way down here to around 1510 on the Russell E-minis. We are short, to be transparent, we are short of the E-minis. Let's take a look at the NASDAQ 100. We are up. They're doing better than the small caps and the S&P 500. So your value names are lagging right now, with tech leading the S&P 500 higher. So the bet here that traders are making is that you're going to see weakness or benign action this week on the 10-year yield. Pat, you traded Airbnb long, right? We still have a position to the short side, though. All right, let's move on. I think I went over pretty much everything I wanted to on the futures. We're going to try to circle back, come back to the futures, see how everything settles out. Let's talk about valuations. I like to do this every week to level set. You know, sometimes you have a rough week in the market and you think that the market's cheap, but you really want to do a pulse check every Sunday night. Subscribe to the channel, like, dislike, whatever. But as we proceed into the new trading week, we're about on par as to where we were last week, a little bit cheaper using the Schiller PE ratio. The Buffett indicator, we have come in a little bit, but let's face it, we are still strongly overvalued using the Buffett indicator. So this is a market that's still very, very frothy and subject to a lot of volatility. Now, last week, what we did is that we had a lot of economic data come out. Matt Carter, thank you very much, sir. Appreciate that. When asked a month ago, Bob said gas would go up even if they had to produce a crisis. Thank you for that. Yeah, I love validation. Thank you. Bob wants his golden goose. Thank you very much, Ricardo. Appreciate that. Big Bear, thank you. Smash the like button. Yes, please. So last week, economic data was just abysmal. NFIB, this is a small business index, miss. I'm not going to bore everybody with the details. CPI, incredibly bad number that came out last week. But frankly, folks, we come here live every Thursday night, every Sunday night for the past year and a half, 2 years. And we've been talking about the charts of agriculture, industrial metals, gold. We've been talking about this. Something just lit off. Gold just hit a new weekly high. Yep, there you go. Good week so far. Okay. All right, back to the economic data. What else do we have? Core CPI, horrible. Core CPI backs out food and energy. This is that headline number. This is the core number. This is what the Federal Reserve likes to use. So again, going back to, we've been talking about inflation as measured by gold, as measured by agriculture, as measured by Pring's Inflation Index for months now. Finally, the government is admitting it. Consumer sentiment missed last week. This coming week, Empire State Manufacturing, important. Building permits on Tuesday. That's important because it's a forward-looking indicator. Remember, the cost of building a home now is very, very expensive. So it's going to be interesting to see what the builders are doing. They have a tendency to overproduce. So if you see a big surge in housing starts and in building permits, and the market doesn't believe that the market can absorb all of that supply coming online, you may see some weakness in the home builders, even though they beat, right? Contractors are notorious. Home builders are notorious for overbuilding at a peak. FOMC minutes on Wednesday. Initial jobless claims on Thursday, as usual, weekly number. And we have some PMI numbers coming out on Friday. We have the Philly Fed as well on Thursday. So a good amount of inflation data. With regard to earnings, there's not much coming out. For the most part, earnings ended the week before last, but you still have some laggards. I always use Cisco to mark the end of earnings season. So they'll be coming out on Wednesday. A lot of retail coming out this week. On Tuesday, Home Depot, Walmart, I believe Lowe's comes out some point in time this week as well. Yeah, right here on Wednesday. Target. So this is a retail week. Macy's. There was something else I wanted to talk about. AMAT. AMAT comes out on Thursday. John Deere coming out on Friday. I did some commentary with regard to CAT. I haven't looked at Deere. However, if Deere beats, you may see a knock-on effect to the upside for Caterpillar, which is one of our watch stocks for the new trading week. So we're winding up earnings season. The focus is going to be back on economic data and, of course, volatility. And don't forget about yields. It's all about yields, energy, and the U.S. dollar. Kurt, Bob, you took SLV miners for the inflation awareness and you preferred to over gold. I don't prefer the silver miners. So you have silver miners versus gold. I like silver better than I do gold because of its volatility. I don't want to buy paper gold. I refuse to buy it. I will buy the miners because the thing about gold is that with inflation here, gold is a currency, right? So if you invest in gold, you are preserving the purchasing power of today's U.S. dollar. However, if you want to profit, if you want to create wealth, you want to be long of the miners. That's how you create wealth in this type of environment, along with other names. I'm a firm believer that emerging markets are going to do well. That's going to be our next lever to pull in our building of our stagflation portfolio. We want to own energy. We want to own silver stocks, gold stocks. We own silver. We want to build on that. We want to add more to our nat gas play. If we're right in today's price action, it appears that early on this week we are right in our call on natural gas. So we're looking for a continuation breakout higher on nat gas consolidation. The beautiful part about nat gas is that the dollar early on in the week had a good week, and that usually doesn't bode well for gold and silver, which had a horrible first half of the week. In fact, gold stocks traded, at least the GDXJ, closed down on the week, despite the inflation data. The CRB index, commodity index, closed down. Why? Dollar popped up higher. Now, natural gas, the beautiful part about natural gas is that it doesn't care what the dollar does. We produce so much natural gas here in the United States, it doesn't matter. So we added to our commodity trades that are not levered to the U.S. dollar, and we plan on adding more. So a couple of charts that we want to go through. CPI. The consumer price index hasn't seen a ramp up higher like this. I don't know. We're leaning into the third standard deviation Bollinger Band on the CPI using a monthly time frame. Let's go back 50 years. You know, I don't think we've ever been here before. And this goes back to 1971. This far extended on the Bollinger Bands. It's hard to see here, but when you drill back down, this is real serious stuff. This is a big gap up higher. And not just 1 month. You got 2 months. You got 3 months. Inflation is on the rise. So the Fed's mandate is to ensure employment and to fight inflation. So in the face of skyrocketing CPI data, consumer price index, miss, beat, whatever you want to call it, a horrible number, as well as the PPI, the producer price index, inflation at the producer level, inflation at the consumer level. What did the Federal Reserve do to combat inflation last week? Well, let's take a look at their balance sheet. You would think that they drew it down, right? Nope. New all-time high last week. The Federal Reserve continues to monetize the debt. So there's no plan here. There's no indication whatsoever that the Federal Reserve plans on combating inflation. So what does this mean moving forward? You know, if you're the Japanese, if you're the Chinese, if the United Kingdom, those are the top 3 buyers of U.S. Treasuries. They're going to want more yield. because of our crazy spending habits nowadays. So I suspect that you're going to see the 10-year yield continue to pop up higher. Now, we did close up on the week last week. We did fade at the back half of the week. But let's face it here. The path of least resistance is to the upside. This consolidation, assuming that the trend is your friend, and while we may be contrarians, we don't ignore the fact that the trend is where the path of least resistance is, right? So if you fight it, that's your bad. Unless, of course, you get extremely overbought or extremely oversold. That's where we act as contrarians. But we're not there yet. We're nowhere near it. So you need to assume that this consolidation on the 10-year yield is going to get resolved with a breakout to the upside. What will that hurt? Immediately, it's going to hurt tech stocks right off the bat. Tech stocks later on, as we hit a two-handle, 2.1 to 2.3 on the 10-year yield, it's at that point with all of our debt that we've accumulated and continue to accumulate, that's when the market begins to shudder. Even your value names are going to come under a lot of pressure. We're not there yet. So as it stands right now, we're consolidating. No big move, gap up higher, gap up lower on bonds this evening. Macarta, Elon is cyber Trump polarizing the masses with every tweet. Falcon, hey, how you doing, buddy? Randy G, I've been selling naked calls on stocks that gap up after earnings. Not a bad play. We've been doing naked call writing as well, and naked put writing. John, top of the morning to you down in New Zealand. 480 shenanigans, rocket. Okay, we'll take a look at that. All right. What time we got? 6:28. Do I have any other chart? Oh, Bitcoin. IRS, federal government looking into Bitcoin more and more. Market share is decreasing. And I don't think this is just a Bitcoin issue. Colonial Pipeline, when they paid that ransom the other day, a couple of things I was looking at. One, should I short the utilities? Because the fact that they paid that ransom only begets when you bow down to bullies, you only get more bullying. So expect more attacks on utilities. That being said, the fact that they paid that ransom with cryptocurrency, I don't know if it's Bitcoin or whatever they used, it's going to come under the scrutiny of the federal government. They're only looking for an excuse. Colonial Pipeline just gave it to them. Danny, good talk, Bob. Check out the weekly SQQQ, 2 in a row higher highs. We'll take a look at it. Okay, you got it, John. All right. So Bitcoin, let's update this, has rallied back a bit. But still under pressure. It's putting in lower highs and now lower lows on Bitcoin. Watch 43,000 on Bitcoin. If that breaks, expect a lot of selling because that's a technical breakdown on Bitcoin. Let's take a look at a weekly chart. And I'm really surprised. Well, I guess not because of the headline news on Bitcoin. But this is only recent headline news that would cause weakness. But Bitcoin, despite the fact, I did some analysis many weeks ago on Bitcoin relative to the CPI, and they trade in tandem. But remember that Bitcoin became very, very overbought. We had RSI only a couple of weeks ago above 90 on Bitcoin. I think that this is technical selling. As long as CPI moves up higher, I think that Bitcoin can move up higher as well. So I am not all that bearish at current on Bitcoin. I do think we can move lower. But longer term, I think that this is the pause that refreshes on Bitcoin. Speaking more about inflation, folks, this is the Baltic Dry Sea Index. This is the cost of moving dry bulk goods, and we are at highs not seen on the Baltic Dry Sea Index. Remember, we import most of our goods here in the States. So this is inflationary. This gets passed along to the consumer, the cost to ship these goods over from China, Vietnam, India, wherever. And we are at levels not seen since 2010 on shipping. Let's do some chart requests. All right, let me write some down. Rocket last week had a good rebound. It took it on the chin on earnings, but it did rally off the lows of the week. Let's get rid of this. Let's go to a daily chart. Not a ton of data here. Nice move up higher on Friday. I didn't really look all that much at their earnings data. I don't think it was as good. The prior quarter was very, very good. This quarter, I don't think was as good. So we'll keep an eye on it. A nice sell-off here. But the thing about Rocket Mortgage is this, is that you take a look at the price action of Rocket, going back to a weekly chart, you know, the stock market has moved up higher in recent months, and not this quarter, but last quarter, Rocket Mortgage had a fantastic earnings announcement. Yet, after the stock shot up higher, it gave up all the gains, and it didn't do anything for the entire quarter. So that's why I kind of backed away from it, because something was wrong. It wasn't performing with the market when it should have been. Somebody was in the know. Therefore, we did some options trades on it, some naked put writing, but that's about it. McCarter, coddle the HTL. All right. I sell fireworks, hearing ships cannot be unloaded in California and are then sent to the East Coast where there is a backlog. Interesting. Yeah, a lot of stuff going on in terms of inflationary pressures. AGFS. AgroFresh. Wow, really nice chart here. All right, so I'm going to take the automated trend lines off here. And we're going to pop them back on. First, this is a weekly chart. I'm going to overlay weekly trend lines. And you can see we have 3 resistance levels above. But we also have monthly resistance above as well. So where to set our alerts here? We did break out last week. All right, so we're looking for a retest of the breakout point. We'll keep it active for the week, a little bit more. I think we're good there. You have good monthly support below that we broke out above last week. It was a very powerful week. What were we up? 17.3% on the week alone. Daily chart. Yeah. We can set another alert here. Oh, we already have it set. Okay, same same spot. So we'll look for a pullback and a retest intra-week. Good volume on Thursday and Friday. Very, very nice chart here on AgroFresh. Let's go take a look at a monthly chart. I'm getting the feel that, yeah. This is a macro breakout on AGFS. You have very, very tight Bollinger Bands setting up for a Bollinger Band squeeze. We don't have a major breakout above resistance on a monthly time frame, though. We're flirting with it. So this is one definitely worth watching as a longer-term macro trade, more of an investment. I don't know this company, but the way the chart is setting up, you have a multi-year consolidation. Bollinger Band's very tight. That sets it up for a massive, massive squeeze up higher. So monthly chart, weekly chart, daily chart, AGFS, bullish. What else do we have? CCJ. Monthly chart looks good. Volume is very, very good this month. Ooh, very nice. Weekly chart. We rebounded very strong last week. I set up an alert here. It triggered. We broke out, pulled back. We did a retest of 1941. It held. Cameco looking really good. Very nice. Very nice. Folks, if you're wondering what charting software we're using TrendSpider. So automated technical analysis, click of a button, you get your weekly resistance and support, daily resistance and support. A lot of functionality here. Automate your grunt work, speed up your technical analysis, 35% discount code below. I don't want to make this a commercial. Let's go back. Let's go back to a daily chart. Nice breakout on Friday. CCJ, I think we're going up higher. Volume could have been a bit better, but you know what? We'll take it. Very nice move up here. Higher lows. It held up under fire. The volatility of the market last week. I think we move up higher. Cameco, looking good. What else do we have? Shorts need leverage. Okay, that's not a request. XOM, cup with handle. Let's take a look. I booked profits on XOM last week. I may regret it. What time frame, Kurt? Daily? Good rebound off the lows of the month. Not a great week last week. XLE bounced back a little bit more than XOM did. Not a little bit, a lot of bit more. Big volume last week. Okay. Kurt, if you want to get back to me on the time frame of that cup with handle, we'll take a look at it for you. I'm not necessarily seeing one here, but you know what? I don't know everything. Good rebound on Friday. New daily high. Resistance at $61 per share. Good yielder. We'll look to get back into it. Perhaps sell some naked puts. Okay, we'll keep an eye on the curve. Daily time frame? All right, let's see what else we got here. Pat, OSTK. Very nice. We're down on the month. I mean, this is a monthly chart, and you may be saying, what's wrong with this guy? It's down on the month. It's horrible price action. Not really. What we did is we broke out in April. We pulled back. We retested the breakout point. We've held. We've bounced. Do we close above the support level in red? I don't know. I'm not that smart. But right now, it appears as though we will. So the monthly chart is looking pretty good. Weekly chart. You can see how this 50-period moving average is acting as a perfect rising lower band of support. If it breaks, you want to avoid this like the plague. But right now, again, despite the fact that it's been down, it's retesting support levels and it's holding. So we don't want to minimize the importance of the stock doing that. It's validating the breakout. What contrarians like me look for, not even contrarians, technicians look for, is a breakout above stiff resistance. Check that box. Then we want to see a pullback and a retest to validate what was resistance is now support. Check that box, right? We did it here the week of the 26th of April. We did it again last week. It held. Do we hold this coming week? I don't know. We'll see. Daily chart. Good day on Friday. Volume light. But that's really the story of the entire market, right? Is that we had a rough week last week. We had a bounce back on Friday, but Friday was a classic short covering rally. Very, very light volume, big move up higher in percentage terms, especially on the small caps. But volume was horrible. No institutional demand there. So we'll see whether or not we get follow through going into this new trading week. So Overstock looking interesting here. I would just watch that 50-week moving average. That's a simple moving average. And I would use a stop right below that point. If it breaks, I would not enter the trade. I would avoid like the plague. If it holds, well then, that's a great rising floor of support for Overstock. Watch that 50-period moving average on a weekly time frame. Matt Carter, ATER. Oh, this is the one you wanted to go over on Thursday. Gotcha. Monthly chart. I'm not familiar with this stock. All right, so it's pulled back off of its highs. Obviously a high beta name. Let's go to a weekly chart. All right, so automated trend lines are picking off support right down here at let's call it $10 a share. And we'll keep this active for, let's go with 2 weeks. I would wait for $10 a share, give or take a penny. Good support down there. Daily chart. All right, so rule number one for buying a stock that's been in a severe downtrend, that rule is it's got to stop going down, right? Check that box. So we stopped going down here on May the 11th. We've been consolidating ever since with no new daily lows. Good stuff. Now, the automated trend lines are picking off resistance up here, but that's way up there at about 18 bucks a share. I'm looking at a breakout. We broke out here, despite the fact it was a down day. We closed off the highs of the session. We broke out daily time frame on May the 12th. Pulled back retest number 1. Do we get a number 2? I don't know. Not quite sure. We have an alert set down here. Now, if we do not see this alert fire off, what's a game plan for possibly getting long? Simple. Wait for the breakout. And you want to make sure it closes above resistance. Don't chase the morning gap. That's a sucker's play. We don't play sucker's trades here. So the game plan would be, ideally, open up a trade down here, 10 bucks a share, tight stop below. If that fails, you want to be out. Stay small, keep your losses small. Once we begin to break out above resistance, add more to the trade, build on strength. ATR looking good. Patience, patience, patience. You got to nibble with these trades. FSR. Fisker. I haven't seen this one in a while. Brutal. You know, I'm a bear on bonds, therefore a bull on yields. I have been for a while. Fisker is a high beta name. Beta does not do well. Beta, I mean by volatile growth. It does not do well in this environment. So that being said, technically we are at support. Or I should say, let me caveat that. We bounced off of support last week at $9.64 to the penny. What was the low? All right, low $9.61, 3 cents off. Weekly chart. All right, so the automated trend lines are picking off. Let's take them off. We closed above one support level, down below 2 others. Nothing really exciting here. Maybe we'll hold, maybe we won't. I think that there's a good chance that we pop up higher. I can't emphasize the fact that it's very, very important to have a sustainable rally here to see the 10-year yield pull back. If the 10-year yield gaps up higher along with Fisker, you got to defer to the 10-year yield and assume that any rally in Fisker is a short covering rally prone to failure. So be very, very careful. Watch out for the 10-year yield. I'm not saying there's not a trade to be had here. Not right here, not right now. If they gap it up tomorrow morning above $11 per share, as noted, you have resistance at that mark. That's a good sign. We spend a couple of days dancing around on top of that resistance level. That's sexy stuff. That's good. But keep an eye on the 10-year yield. Very, very important. They'll trade inversely of one another. Taylor, look at the VIX divided by VXV. I don't know. I'm not good at that. I'm going to skip that one. Kurt, Bob, thoughts on reopening of hammered economy plays like Boeing? Boeing, I talked about with members on the week ahead commentary. I'm torn on Boeing. We'll bring it up. We can talk about it. The chart specifically I used for the week ahead commentary, it's posted in the members area. This is the chart here on Boeing. where we had broken down below this, at one time, a primary support level, but it failed. We broke down the week of April the 19th and continued lower, despite the fact that the week of May the 3rd, we had a bullish reversal bar off of the rising 20-period moving average on a weekly time frame. A healthy stock would have capitalized on that. Aggressive technical bulls would have bought on that reversal bar. They didn't. Actually, I'm sorry. Let me take a step back. They did buy on that reversal bar here. The problem is they bought too early and they got sucker punched because we broke out to new weekly highs, which is not a bad bet, but it reversed to close lower, and we, in all actuality, put in new weekly lower lows on a intra-period basis and on a closing basis. So, do we hold the support level? I don't know. Where would I want to buy Boeing? Ideally for me, I've always liked the 190 mark on Boeing. Would I be surprised if we held the support level? Not at all. I think that this is very familiar, this pullback off of prior pullbacks. Very similar setup here. Daily chart. You know, would I buy this as an investment right here, right now? Sure, I'd nibble. Would I buy it as a swing trade? Probably not. Probably not. We have a lot of resistance up here at 230 per share. Where do we close? 228.47. Too much risk, not enough reward on Boeing as a swing trade. As an investment, different story. You're going to want a dollar cost average into it, though. I would also check out with Boeing, given its history, seasonality. They have a default here of 19 years. That's good enough. So here we are in May. We're up 52% of the times. We're not in a seasonally favorable period of time. I like to look at investing or trading as a game of chess, not checkers. So I want to look out a few months, not just May. I want to know what we normally do historically in June. We're up 50% of the time. July, same deal. August, it's the weakest month, second weakest month of the year. So we're not in a seasonally favorable period of time for Boeing. That being said, there's no pressure on us to act right here, right now. It's under pressure. This is a market under pressure. I see no reason to go getting long right now. If the shares get put on sale, they come down to 185, 180, 190, then that'll be very, very good. But right now, it's okay. September is a really good month. And that's 19 years worth of data. What else do we have here? We did OSTK. For John, QQQ, and the SPY. Okay, so this is a tale of two markets. I've been saying that for quite some time now. The Qs are in one bucket. That's one market. That's your high-tech beta growth stocks, where the rest of the S&P 500, while yes, it's influenced by the triple Qs, your mega caps, your value stocks are holding the S&P 500 off of the lows of where the Qs have seen of late. The banks are doing well. Why? Rising yields. Your transports are doing well. Nice bounce back last week on the transports. So that's what's keeping the S&P 500 up. Now, for the Qs, weekly chart, new weekly low last week. We are nearing support. We have a couple of support levels here. Let's overlay. Do we have any monthly resistance levels here? Not really, no. I'm surprised. We're holding a bunch of moving averages. We held a volume shelf last week. Not horrible price action, good recovery on the back half of the week, but that recovery was on very, very light volume. Watch your yields. Watch your yields. If yields jack up higher, expect weakness on the Tues. If they stay on par with the close on Friday with a bias to the downside, expect a bid on the Tues. Simple as that. Again, nice move up higher on Friday, horrible volume. We got stopped at the 50-period moving average. So the jury's out here. Relative to the S&P 500, two different markets. The S&Ps did a bit better on Friday in terms of closing above their moving averages, weekly chart. We held support here, but failed to recapture here. So technically, while we reversed off the lows of the week last week on the S&P 500, it was a breakdown week. Remember, the week prior, we were holding trend. Last week, we failed. We broke on volume, no less. Let's take a look at seasonality. May is a good month. Historically, not a great month, but June is by far the worst month of the year for the S&P 500. Put this in your back pocket and store that information. It's very, very important. This is 19 years worth of data. Not insignificant. So to me, I think that what we're going to see here is more pressure on the S&P 500, perhaps a few weeks of consolidation. But I think that as we proceed into June, we're going to see pressure. I do not believe in this sell in May and go away, that nonsense. That ended years and years ago. But I think that June is setting up to be a rough month this month. There's going to be a lot of anticipation of more inflationary data in June, given the inflationary data that's come out thus far in May. So I'm not optimistic on the S&P 500. I have a short position, to be transparent, on the S&P 500. I sold deep out of the money naked calls. I am not short of the physical SPY, but we are short of the S&P 500 using a option strategy. It's part of our market neutral approach to this market, trying to stay as far away from the fire, yet generate cash flow as much as possible until the market decides which way is it going to go. You're going to break down, you're going to break out, then we'll trade accordingly. Right now, we're looking for opportunities. We found opportunities last week in natural gas, other natural gas plays. One of our members Franklin brought up a great natural gas play. There are great plays out there in the natural gas space. All you need to do, check out my video. I put it out yesterday morning or yesterday afternoon, best stock charts for the coming week. And you'll watch the stocks that we're looking at into the new trading week. What time do we have? 1 minute. Let's circle back and take a look at how the Macarta AMC. You know, I took a look at AMC after their earnings last week. I forget what night it was. But I was very impressed with the way the shares held up. No volatility whatsoever. And sure enough, a big move last week. Now, what you're looking at here is a weekly chart. But what I have overlaid is monthly resistance on top of this weekly chart. I could take it off and put it back on. This is the power of automated technical analysis. I love the higher lows. I love monthly resistance here. We attempted to break out last week. We were rejected. Let's go to a daily chart. Yeah. 2 days in a row. A rejection at monthly resistance. Let's create an alert. You know what? I don't like this resistance level. I'm going to create another one. I like 1450 better. Set and forget it. Now we wait. Big Bear. I just can't do GME and AMC. I don't blame you, man. R-Train deck. Let's go to the weekly chart first. Nice chart. Down week. I don't care. It looks good. Bollinger Bands are tightening up here. We rallied off the lows of the week. Let's go to the daily chart. Nice price action on Friday. Volume was good too. Unlike the rest of the market, where volume was very weak, volume on Deckers last week was very, very good. Just keep in mind, again, folks, this is the value of using the automated trend lines. If you're not using TrendSpider, 35% discount code below, take these off. You want to know where your resistance levels are? Or if you're thinking about buying Deckers, you want to know what's my risk v reward. Click of a button. Here's resistance up here in blue. So would I initiate a new trade here? Probably not. I'd wait for it to rally, pull back, higher low, then enter. Again, volume was very good. Let's circle back and take a look at how the futures have settled down. Gold is up nearly a 0.5 percentage point. The dollar trying to hold support here. I'm not a bull on the dollar at all. Silver attempting to break out here. We're up nearly 0.75 percentage point on silver already this week. Equities, S&P 500 treading water. In essence, flat at resistance. NASDAQ 100 flirting with a breakout above resistance. We've been rejected, but it's still very, very early. The Russell 2000 still struggling here at resistance. You know, I have short positions on, and if we had seen rising up volume on Friday, meaning institutional demand, I'd be a little bit nervous. I'm not really all that nervous right now because we're at resistance. I know there's no institutional demand, so I'm not going to get all too concerned here. Nat Gas, are we holding gains on Nat Gas? We are. Very, very nice. Here's a weekly chart of Nat Gas. We're on the verge of another major breakout. Here's your W formation. We've been talking about this for weeks. We opened up our initial trade last week using Boyle, which is a leveraged ETF, putting you long of Nat Gas. If we get a breakout here and a short covering, a short squeeze, I will be looking to sell probably a 1.5 standard deviation covered call on nat gas, or boil, I should say. But I want to see that breakout first and that short squeeze occur. Then we'll sell that covered call. Not right here, not right now. Let's leave it off with Evercritical bonds. And they are now down, which means that yields are ticking up higher. Not a big move, but something to keep an eye on. And with that, folks, please share with a friend, comment, like, dislike, subscribe. You know the deal. Thanks for being here. I appreciate you spending a little bit of time every Sunday night. Great participation, great conversation. Thank you all, and have a profitable trading week. Be well.